The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, where we meet pretty much every day at this time.
The following takes place between 2 p.m. and 3 p.m.
Well, we've got the market pulled back about 11 or 12 points, volume just a little over 2 billion shares. For a Friday, fairly decent volume already. We're maybe tracking just a little bit behind yesterday now, but it's not uncommon to see Friday see that. The market never really got much going on early on in the morning. We held around 2170, 2172 after the open. If I had to put a reason on it, it was the fund outflow numbers that we saw this morning. They're pretty devastating. There isn't a whole lot to say that this market's going higher. There's certainly a great deal to say that people are exiting stage left. I'm going to have to get that as a sound effect, am I? I have to find was it Tony the Tiger? Exit stage left. But we will have to find out. Anyway, there's always money either coming into the market or going out to the market, kind of manic depressive. Things are either good getting better or bad getting worse. And we've got some evidence that at least some folks are exiting stage left in a giant hurry in a stock that you don't hear much about. People leaving, let me put it that way. In the meantime, we've got some very good history, some things to think about. 166 on the S&P cash volume, about 2.05 billion shares on the consolidated tape. And let's get this party started.
That it's all just a little bit of history repeating.
What else is going on out here? On this day in 1988, I had been a pretty much full-time trader for all of about 30 days. Wall Street top investment banks, encouraged by the Federal Reserve, complete marathon negotiations for a $3.65 billion bailout of the giant hedge fund long-term capital management, which lost nearly $2 billion in a single month when the mathematical models designed by two Nobel laureates failed. Some great books in there, When Genius Failed. I'm trying to remember the guy who wrote it. Great book. I read about 4 books on this because at the time in the 2000s after the dot-com bubble, I really wanted to understand why not only smart people did incredible stupid things, but why some of these big models broke. That these really, really smart people just continued down a road of actual doom. Now, this wasn't the last chapter in long-term capital management. I recommend everybody to at least know about it if you're going to be a professional trader. There's a lot of lessons to be learned. Paving Wall Street's another good book. There's about 4 of them. I learned something from almost every book on this long-term capital management. What else can you say? You had a nice day today, but before October, it was going to take the Treasury Secretary and, of course, Mr. Greenspan walking in to the market somewhere around, I think it was around 1 or 2 in the afternoon. And at that time, we were down, I think, 500 points in the Dow when everything was blowing up in October. And that's like being down probably, 1,200 points now in the Dow. Imagine that. And having it go to 1,000 points positive in the day. I think that's pretty close to the thing. But there was going to be some huge doom happening. They came out there in the middle of the day and flipped the market on its head. But it took a while to figure this out. But not a lot of people, when everything seems to be going great, not a lot of people asking questions. And you could see going into the housing bubble in 2007, almost the exact same thing. Everybody thought that everybody had to be smarter than them, so they didn't ask any questions, that these guys had to be great. To give you an idea how bad things were, long-term capital management had 130 times its actual cash value in leverage. Most of all this was in bonds, and of course, if you figure this out, it was all in Russian bonds that blew up. Everybody, for some reason, thought that if they just keep putting money into it, just doubling up, if you just kept doubling up, things would come around. And of course, markets can be rational longer than you can be solvent. And it was proved by long-term capital management in 1998. In the next 2 months, the volatility was insane. And I thought that's the way it should be every single day in the market. You know, I just started off. That's the way it is, isn't it? It's been that way for the whole 60 days I've been a professional trader. But what else can you say? On this day in 1988, or 98, excuse me. Don't want to be a decade off out there. After the bell, that was this week. Before the bell on Monday, as we look forward to next week, we have Carnival Cruise Line. RCL seemed to be doing fairly good, so we'll see whether that goes into Carnival. Haven't heard much about Mr. Zika lately. Seems like they've killed everybody and everything in South Florida, Southeast Florida. So we haven't heard a lot, but still have a big Zika problem in the islands. And I'm wondering if we see any kind of hint of that in the near future from CCL or CRL. What is it? RCL. After the bell on Tuesday, we go to Cintas. They make uniforms for people, for businesses, especially a lot of big businesses. So that kind of gives you a read on how many people are employed on that. Nike, of course, they just came out with their automatic lacing shoes. I have no idea how much they're going to be for expense. I haven't seen that yet. But after the bell on Tuesday, that's kind of the most mild of stocks. Probably going to do okay. I can't really see anything horribly wrong going on with Nike. Cintas, hard to tell. Paychecks after the bell on Wednesday, and then before the bell on Wednesday, and Pier 1 after the bell. I don't know if you can say anything other than is Pier 1 still in business. It's got problems. And then we get into the end of the week. There just isn't that much. So there isn't going to be a lot moving this market. There's not going to be a lot of earnings. We've got about another 3 or 4 weeks before Alcoa, I think, starts back up. So a lot of nothing happening. And the problem is we get into the markets like today. They push up to the highs. And why they can drag retail investors to the river, they cannot make them drink the Kool-Aid. I'm going to win for the Mixed Metaphor Award, hands down again at TFNN this year. There's nobody that can mix 2 or 3 or 4 metaphors together like me, is there? We'll be back after the break. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back, and it was Snagglepuss. I couldn't remember the name. I don't know. But, thanks for the link. I will get that clip. Anyway, we were talking about a few stocks moving out here. We'll get into that and much more. In fact, let me get my movers up and running here real quick. Okay, got those. First one I wanted to talk about went into detail today in the Tech Insider. But Facebook is down. Interestingly enough, there is a monster seller. I mean, let's call it, what is that monster over there in Japan that stomps on everything? Godzilla. That's it. I had to sing the song. Oh, there he goes. Oh, Godzilla. So anyway, remembered Godzilla out here. Well, if you remember the gentleman that founded WhatsApp, this guy has been on a tear. I don't think I brought it up, although I saw a couple of them. He sold, he's probably close up to selling 100 million shares in the last month of Facebook. I wonder if he knows something that we do not know, or maybe he's got a good idea of where to go with his cash. We've seen Zuckerberg sell a few things, but that's kind of it. It's, I've got to go back to Facebook here. And then we'll get to bats, which we were talking about yesterday. You had a gap down. Volume is picking up just a little out here. I'm not going to say this thing is monstrous, but it certainly is kind of interesting that one of the biggest holders of shares has been on a non-stop selling torrent of selling Facebook. And you got to think that either he thinks it's the top or he thinks that there's a better stock to get into. Of course, also hitting Facebook. That was the story that I didn't see reported today. The one I did see was, of course, as we've said before, there was an economy with the truth with the way that the video ads have been playing. We've known that for some time, and we've reported about it here on the Power Trading Hour. But down a bit. But a lot of times these stocks become cult stocks because they're cult companies, to be a little bit of Facebook and Apple. Apple, of course, probably the prime. I mean, I can't even say it. The prime cult stock. But Facebook, kind of there. The people that are involved in Facebook spending 2 or 3 hours a day on it. They're into it. To me, I've got so much to do. I couldn't spend the kind of time that everybody wants to get involved in on Facebook or Twitter for that matter. But down fairly good. Let's take a quick look at Apple. Apple, a lot of the Apple press is not spending much time on Apple today. It's got a few flies in the ointment of things going on around down there. Volume really is about the same as what we had yesterday, but it is down. Went back into the gap up of the 15th that had a lot of volume. So you can give this thing, I'm not saying the wheels are going to fall over off of it, but Apple has a few problems. Its new OS has some bugs. The phone itself makes some kind of buzzing sound that's irritating some people, and some of the reviews are not being that nice about battery life in Apple, but it's hard to say. You got 3 nice gaps out here that could get filled and take you all the way back to about $98. I would not short it, but I would not be surprised if I was thinking about buying this thing. It certainly would be sub 100. I don't see any reason on buying it up here at $115. I don't see a great deal more going on. Bats had some news after we talked about it yesterday. Some buyout rumors. Oop. Wasn't it? Buyout rumors on Bats. Nice gap up on this today with some volume. But the news is kind of out on it. Didn't see much in the way yesterday of a lot of news that would make me think it's truly getting bought out. But you never know on some of these, and certainly Bats is one of those. What else did we look at? We looked at Apple. What else did we look at? Wanted to take a look at some other ones here. Let me take a quick look. Finish Line didn't finish so well. FINL, the shoe retailer in the mall. Down, volume did pick up. In this one, you went back into the gap yesterday. You did so on 2.8 million shares compared to the just 700,000 shares down on the 9th. So it wasn't anything yet here that you could really tell going into it. Today is probably fairly decent indication that this thing is probably now in a trading range back to this gap around 18 and 22. Mall stores still kind of hit and miss. Nike might tell us a little bit more. NKE. See if this thing's got any kind of movement with it. Same kind of thing with Nike. Certainly looks like it wants to come into this gap. That would take you back to about $53. No biggie on this. But, back into the gap, you'd really, if you were thinking long on this, want to see that it tested the June 27th low of $51.48. That has 15 million shares. I'm going to count that as kind of a high volume low that has been untested. So a lot of these, they could go up, but there's not a safe entry point until you get a lot of these lower prices tested. You can make a case that the February 8th low of 2016 was perforated, but I dislike the 20 million shares on the way back up. Normally, you want to see these things build on volume up, not just everybody jump on board in the next couple of days after it's been lower. And you get kind of a lot of this kind of stuff. Nice bounce, but not back up to the previous highs on Nike. And what else do we have going on out here? IM Gold, IAG. And then we'll get into some questions on the mail. Somebody sent me something about the Zika stuff. What else do we have? Yeah, down a little. I don't think you can make a lot. This thing's still in the channel on the upside for IM Gold, so I'm not going to say much on that. We said for the last few days we were waiting to see how Steelcase and Herman Miller did on earnings. Kind of a little bit of a reversal out here for Steelcase. Did open kind of at yesterday's high. It's come back down on a little lighter volume, but still down 3%. Herman Miller, what is that? MLHR. Take a quick look at this one. Down 2, tried to open higher. Down, not a lot of volume so far. But it doesn't look like a lot of hiring is going on this quarter for both of these suppliers to offices. We'll be back shortly.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We had a question in the den, and this is probably about as good a time as any to get into it. And on a day where it's kind of quiet, we're going into Friday's close. We'll hit a few more stocks before the end of the day, but maybe I'll just spend this segment talking about machine learning, which is kind of the biggest thing in technology. I've been writing about it since before last Christmas is the coming thing. Machine learning, a lot of people call it a part of artificial intelligence. I will say that artificial intelligence is not anything close to artificial intelligence, so I will dismiss that. Machine learning is a way of doing several different operations. There's two branches of machine learning that if you wanted to start at a tree and split off. The first branch is basically known as supervised, unsupervised learning. And that's why machine learning, probably a much better title than artificial intelligence, because it's not. It's just a program that gets better the more data that you feed it. Supervised learning means that you know something about the data that you're feeding it. Let's say you made it like a spreadsheet. You know the date and time of something. You know whether it's maybe it's a contact list. You know whether it says Mr. or Mrs. or Miss. You may know a variety of things. Each one of them is labeled. You know the person's age, maybe their date of birth. If you've got all that data and it's already categorized already, that's known as supervised learning. And you can put all that data together and maybe do something with it. The other part is unsupervised data. You got it's a bunch of pickup sticks. It's just data thrown everywhere. It is categorized, but maybe you don't know its actual purpose or how it works in a system. Let's say that maybe you had some numbers and you didn't quite know what they were or where they went. The best examples are supervised learning, so I'll go on from that. There is a reason to have unsupervised learning. But then you break that down and you break it into several issues. One of them is what's known as classification. For Google, it is maybe trying to figure out whether a picture, or even Facebook, whether a picture is an apple or an orange. Is it a human? Is it a dog? Is it a cat? I think we talked about convolutional neural networks last week. That is a method that can figure out and eventually, if you train it well enough, be 98% accurate on whether or not it's a fern or if it's a palm tree or if it's a dog or a cat, a human, a car. You train them well enough and it can do it. And most of those are neural network type operations. There's another kind of machine learning called linear regression. Linear regression is kind of a classification algorithm. Let's say that you wanted to have stocks that should be sold and stocks that should be bought. And you did a scatter plot. You draw a line maybe through the center of where they went, and that would give you, you'd say, okay, everything on the above part of that line is a buy. Everything below that line, I'm going to say, is a sell. That's kind of an interesting way of doing it. There's another version of that called support vector machines that does a linear regression that tries to push everything to one side or the other, either a buy or a sell. Basically, it's trying to find the center point of the data. Support vector machines kind of do that and put kind of like Bollinger Bands on the side of it. So maybe you'll put that line a little bit farther higher and lower, and just say that the ones in there that are close to the line, maybe they're indeterminate. So we won't count those. We'll just say that we're going to put kind of a statistical inference, maybe a standard deviation above and below the line, and maybe get a little bit better kind of idea of whether or not that's a buy or sell on the stock market. So there's a variety of these things. Neural networks, we talked about a little bit. That's where you kind of know what everything is going in, and you know on the opposite end what it is. Like if it's an orange and an apple, you've got two pictures. Maybe you've got some humans, and you can get, let's say you can get 50,000 images and test and get people to actually say, yeah, that's an apple, that's an orange. And once you get that data and you get the humans to back it up, then you can start putting that thing into neural networks. And you may not know how to figure out what that image, or even to write the code to figure out that it's an apple or an orange. But guess what? The software literally is adaptable enough without you doing anything to go out and figure, that there is some difference between that, and it will continue breaking down the images until it figures out what it is. Maybe it's the redness of the apple, maybe it's the texture of the orange, but that they just keep breaking down the images. They may be looking for things like little round things that may look like eyes, maybe a long slit that looks like a mouth, maybe things that look like ears, maybe arms and legs, maybe four legs, right? So it knows it's an animal, not a human. And the algorithms are good enough. So you've got a couple of things. You've got algorithms that will learn, but mostly you've got to already have data that you know is right. And that's called learning, machine learning, where all this stuff gets its data from. So you've got a lot of applications for that. Probably the best example of machine learning is for the zip code system that the post office uses. It has about 1 million samples of different people's handwritings of how they write zip codes. It's learned all of them. No mail, at least at the beginning, no one ever looks at the zip codes at it in the post office. Each one of those digits has been from every human in the United States has been fed into that machine, and it knows how to read basically all those 5-digit zip code numbers, and it's 99% accurate with handwritten zip codes. And if you actually go to learn machine learning at a school, one of the first things they'll do is run you through that data set, which is available, and you'll learn how to train these algorithms to do it. And probably the big difference and why are machine learning algorithms important now, and we kind of covered it last week, and that was that there was a new way of training these things that wasn't available. There was a paper out in 2008 from some big mucky muck. I think he was in McGill, which is just outside of Toronto, Ontario, who figured out a way to not only train the models forward, but to train them backwards, to actually kind of get better on their own. And that made neural networks and a lot of image processing, audio processing, voice identification, all these things. But supervised, unsupervised, classification, and prediction algorithms, that's kind of it. They're used for everything now. Like, what are you going to buy next on Amazon? They're running in the background.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, I was waiting. Thought maybe something would come there. No audio. Okay. Good enough. What else do we got going on out here? We're off 10 points. No big deal so far. As yesterday I said, I was feeling a little bit bearish.
Smokey just gave me a bear hug.
Oh, did he give me a bear hug? Didn't like the way that we went higher. Volume didn't come in. We were $1.5 billion shares off of Friday's volume. And pretty much gave me kind of a bearish feeling yesterday. As we said, we didn't bet the farm, but we do have one short position now in the daily. We'll see whether or not we can continue to get some confirmation to go into the longer-term newsletter and get a position. But right now, confident and happy, just being a little short in this market. What else do we have? We got some email. One of my buddies who's listens to the show is in machine learning, and he reminded me what he does, which is work on machine learning to tell when people go to websites, how quickly, depending on what they click on, can we determine that it's a male and a female or a female, and vary the website experience to them to get them the biggest chance. He basically tries to get people to sign up to gym memberships, and apparently very different reactions compared to and what things you want to look at to get somebody to sign up if they're a male or a female. So a completely different web experience after they've clicked on a few things. And he can about 90% accurately, after 4 clicks on the website, determine whether it's a male or a female. And in 6 clicks, tell probably within 10 years of how old they are. So machine learning does give you a kind of advantage into manipulating the experience that these folks get. Also, Amazon's always trying to link up, people bought this, you bought something. And then, of course, other people that bought the same thing, they start showing you the ads. And again, that may go back into machine learning. And, well, I know this guy's in Florida, so he's probably not buying big, bulky jackets come fall. But you know what? He bought a few things out here. Maybe these things are things he might be interested in. So it might take in all kinds of things like where you live, how old you are, what sex you are, and be able to make a educated guess, a statistical guess of what you need. GoDaddy was one of these stocks out here that I saw with the exact same volume yesterday. I wanted to see how this one reacted. Kind of not a whole lot of signal out here, but it was kind of interesting seeing this one at least test the previous high of December 8th, 2015. This one might be a legitimate breakout. It may still be in a trading range. Don't have enough data on it yet. GNMK, Genmark Diagnostic was kind of interesting. This thing on a little longer chart is looking like it could get back up to the $14.40 range. Don't have a lot other than this thing has got 3 advancing soldiers out here with a lot of volume back to the 16th. Maybe this thing on a pullback to $10 would be interesting. Goldman Sachs, who we've been talking about this chart coming back up to these big gap down days that go back to the 6th and 4th of the beginning of the year. These things have run back into that supply line and have been hitting these things. First time back into it was April 21st. You had 4.8 million shares. And, of course, on the 9th, we just got 3.4 million shares. This thing has kind of gone sideways out here. Some people are all trying to wrap political issues around Goldman Sachs. I don't think it matters one way or the other. It may be worse if one candidate gets elected than the other, but I don't think it gets better. I think there's bad and worse for Goldman Sachs going forward. And that one, the leadership in the Senate probably has some people that's going to come after these folks, independent of who's the president. And of course, it could get worse if the candidate that they gave no money to gets elected. So I don't know. I don't see where this really gets a lot better for them. Like I said, bad and worse for political leanings going forward. And a lot of that clawback stuff is coming out here. The chart does not look all that bad. You did have a legitimate test of the February 11th low of this year. It went below it on June 27th with 7.3 million shares. So you do have a low out here. What I like is that the energy off that June 27th low up to these recent highs on September 9th wasn't any more than the volume and energy off from the April 21st high. So a lot of these things just look like bigger trading ranges. I could see this thing, though, with interest rates going a little higher and maybe the market's pulling back. Would not be surprised to see this come back and fill this double gap back at $148. That's probably where I would be the first chance of even thinking about buying Goldman Sachs if I wanted to go long. I don't know if there's enough money in it to short it. Hibbett Sports, know nothing about this company. Do find the chart rather interesting for a kind of a lower volume stock company. One of the things I love the best is the high volume low back here at $27.58, where it had 1.5 million shares. That low is untested, so you've got kind of a nice range. We're at 41.91 today, coming back into this big gap down that happened on 1.7 million shares on the 11th of August 2015. Again, that's why I'm not thinking that I have a lot to worry about for these indexes taking off to higher. We're running into so many of these double gaps, which this one is, and on lighter volume. I'm not going to say that the wheels are going to fall off this, but if you got a few more signals out here that look rather bearish, would be very interesting to look at this 27.58 low on a possible move back down. Dick's Sports, some other ones, some just don't know if there's that much room left with Amazon for these. Mifflin, Harcourt, and Brace. I guess Brace got lost. It's now just Mifflin, Harcourt. Mifflin, Harcourt, and Brace. It used to be Brace somewhere in there. It has broken down, and the June 27th low is what we've been looking at 1472, 1.6 million shares. We're blowing through that at least today with a double the volume. Not a good thing. This looks like it could go down a little bit farther on an expansion. Let's take a quick look at that. That would take you down to $11.33, $13.10 for the low today. So you still have what, another $1.80 to go just to finish an ABC on the downside on this one. We'll come back to many more. We got a few emails I need to talk about. Put messages in the den. I'll read them, of course, at the break. But that's it. We'll be back shortly.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And it didn't sound good. It sounded like somebody recorded it.
Exit! Stage right!
Well, that one sounded better. I'm going to have to get a few of those together. I didn't like that one that I had, that I snagged. I'll find a good one. Anyway, as I said, I'm kind of leaning toward the bear side. Got my toe in the water. Haven't dived into the deep end just yet without putting a little bit more of a stick down there and seeing if it's a little deeper. I just don't like the incredibly light volume that we've seen as that we push higher into these. And, of course, the repeated lack of anybody buying any breakout of these recent highs just gets narrower and narrower for the leadership of the market. One thing I did want to share with you is, of course, a lot of people know that have been listening for the last year, is I have worked very hard to try to get short data on a daily basis. So I know, especially in individual stocks, whether everybody's been shorting it lately. I've also made some kind of indexes to look and see. Don't know how many people went home short, but I do know how many trades originated as short positions. So we can kind of get an idea of what's happening. Now, normally you get 13, 14% of the NYSE or of the S&P 500 stocks getting short, and that's generally a fairly decent signal out here that we've got some kind of low. Everybody seems to want to short at the very bottom of the market and wants to not short at the highs. So you want to look and see at highs and moves in the last couple of days, whether we had any kind of big numbers of people actually shorting this market. And on the 20th, we had 12.3% of the shares. The 21st, 11.28, 11.74 yesterday. So I'm not seeing anything in that 13, 14, 15% range that shows that anybody's actually trying to pick off the highs out here, or that there's an abundance of a bearish sentiment that would be an easy pickings for somebody to drive this market back higher and get everybody to have a little short squeeze. In fact, just the opposite. We get back up to these things. No one wants to sell. Everybody wants to buy the pullbacks. No one wants to buy the breakouts. And more important to me, no one's shorting extensively those breakouts. And there's a handful of stock, maybe 50 stocks out of 5,000 that trade that seem to be getting all the hate and haters on them. In fact, let's go back and look at Tesla, TSLA, very quickly here. Again, this is another stock that is incredibly short. And I've had some people ask me, well, what do you do out here for something like this one? And the only thing you can do is use an abundance of caution when you're shorting these stocks. Tesla has about 20 to 24% of the shares of its stock every day. Initial trades are short. So you got 1 out of 5 or 1 out of 4, depending on which day you walk in, of people shorting Tesla. Everybody knows that it's going lower. The question is just how many times can they run the shorts out before the stock actually breaks. I think you can make kind of a case out here that this one is looking kind of close in an ABC down. I would have liked to see, I want to see maybe just a little bit more up here. I'd like to see a short squeeze too before I pulled the trigger to know that anybody that was possibly thinking of capitulating on their short was out of it. So like I said, just an abundance of caution. There are a handful of stocks like Tesla that are short. Just avoid them. Go to the easier pickings, the low-hanging fruit. We'll see you Monday. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.